Good morning from Baltimore. This is Alistair Williamson. Today is the 7th of July, 2017. What is on our minds this morning is West Texas Intermediate tumbling into the 44 handle, down about 130 basis points, probing to the monthly pivot at 44.81. Use that monthly pivot as a major line in the sand for the next directional imbalance hint below the 44.81, the higher probability to the downside, and above the 44.81 pivot, higher probability to the upside. Right now we are to the downside, and it's very concerning. What are some of the market generated information that we have seen to send the auction lower this morning? That is basically on the resurgence of crude production. We saw prior session with the EIA report. Keep in mind it's a holiday week. We actually saw major draws in crude and crude products, but we continue to see the tick up. So any kind of rebalancing narrative was thwarted prior session. We're also seeing the auction, the dual market auction, with sellers taking hold here, primarily due in part to some foreign news. First, we see Russia and non-OPEC countries basically lacking enthusiasm to cut into the second half. So that is a major market generated information that has been developing the past few sessions here. And then also we're seeing from a Wall Street Journal article, basically Wall Street Journal is now reporting OPEC is mulling production caps for Libya and Nigeria. What happens? No one cares. The ability of OPEC to communicate effectively is dead. And it's the boy who cried wolf syndrome. Let's transition to the technicals of West Texas Intermediate to understand this pivot and what it could mean in the next directional imbalance.
Transitioning onto the technicals of West Texas Intermediate, all time frames here: monthly top left, top right weekly, bottom left daily, and a 300-minute bottom right. All time frames, sellers are in control of the dual market auction, sending the auction lower. That is very, very dangerous. Let's talk about the top left of the screen on the monthly time frame, and we see that pivot rejection, 44.81. What we see is an inside print here of prior month's session. Volatility is decreasing, which is telling us that we're going to have the next major imbalance in the near term or on the horizon. Use 44.81 like we specified into gauging the next directional imbalance hit. Is that going to be to an R1 or is that going to be an S1? So we need to understand that these major crossroads here are imminent, and we have to understand the pivot of 44.81 will be the best guide in understanding what way that direction is. Is it up or down? Now, we've spoken to a few managers and here in Baltimore, and what they've specified is a very simple technical line in the sand that they're watching is a 47.69, and we see that break and they say, Alistair, you notice we're in an outside print to the downside of this 320 SMA. That is a very dangerous break. And just be careful. And that's what, that's some items here that we're watching, but we're not as focused on that 320. We're more focused on the pivot of 4481, because we're either going to have a major supply disruption and hit R1, and that could be a powder keg that we have in Qatar, or that could be a powder keg that there is in North Korea, or a major shipping channel, or something out there. Something needs to happen, or oil breaks down. Let's take a look at the right side of the screen. Now, we were on Macro Voices not too long ago, and we were talking about this y-axis P-shaped distribution. How it was formed, it was when when OPEC and the hedge funds behind OPEC and central banks and world governments came out in a collective effort and threw the toolbox at oil. And what we saw was we saw this narrative of OPEC and non-OPEC, so Russia and Saudi Arabia, agreeing, disagreeing, agreeing, whatever they were doing about production freeze and cuts. That worked for a little bit. Then you saw Nigerian Delta Avengers attack Nigerian pipelines. They had a social media account. I think it might have been exposed that they had a PR firm. Who was funding them? Was it OPEC? Was it our government? Who was funding the Nigerian Delta Avengers? But it all simultaneously happened in the time span of rescuing oil. So we can see how manipulative and distorted these markets are, and how desperate the overseers are in taking oil higher. Then we saw Canadian wildfires. We saw refineries, shut-ins. We saw strikes around the world. We saw the whole toolbox, and it took oil from 26 to 55. Well, that formed the P-shaped distribution, giving it a very top-heavy appearance here, and actually underlying market very top-heavy, which is now we're dealing with the consequences. And that consequence, if the pivot here at 4481 does break, and we actually do break 43.42, which we probed in the prior session, we would break the lower value area, and there is no support down here. That's what's very scary. There is no support. And what we think, this is scenario one. If scenario one is if we break the 42 to 43 level right here, if we break this level, what could happen is we'll have an S135 hit. Then what we would do is we would form a double distribution. This double distribution would then rotate like this for multiple years here, and then we would create a normal distribution or bell-shaped looking curve distribution, and then have a true rebalancing. Or what we would do is we would hold this 42-43 line, have a major supply disruption, and test back up into that R1. So what we can tell you is that there's major moves that are coming into oil, and we want to be very careful that if 44.81 is rejected, all hell would break loose, and especially 42 to 43. If that is rejected as well, all hell would break loose to the 35 handle. Now, if there is a supply disruption and Qatar or North Korea or a shipping channel gets out of hand out there, then we would see that support at the pivot of 44.81 or even at 42.43 and rocket ship oil much higher. And then we're not even talking about the physical market because that's so oversupplied, demand is lacking, that we understand the trajectory there. Let's head over to the bottom left of the screen, and that is a daily time frame. Notice the unwinds here, and we call these V-shaped A-frames, V-shaped A-frames, V-shaped, another A-frame. This is just a massive unwind. And remember this, the first downward thrust from this 50 to 55 bracket from the 4Q of 16 into the 1Q of 17, that was about a 15% drop. What did we see immediately after that? We saw Trump launching 59 Tomahawk missiles. At this point, I'm saying that, those missiles, what did they do? They didn't do not much at the Syrian airfield. Not much happened there. So it leaves us to believe that possibly it was a tactic to curb oil from the downside because it was happening on the 200 SMA. Remember, those missiles came out of nowhere. Is that basically this administration trying to protect oil prices? If so, it worked, and then it sold off, and then we get this extension cuts from OPEC, and that actually created a ceiling, and we get the sell-off, and now we're in the same shit show, folks. The same shit show of oil unwinding. It's very bad. It's very bad here, and there's no one else to blame but our government, OPEC, the funds behind OPEC, central banks, for creating this manipulative market that took oil into a massive upward thrust, almost up 100% without even rebalancing the auction. And now we're left with even more oversupply, crude products and crude. What's the point? The point of the broadcast is that sellers have taken control of the entire market on all time frames. The unwinding is here. It's been here all year. And we've mentioned this all year. The unwinds are here, folks. It's leading to lower economic growth, especially here in the U.S. When oil goes down, that's not good for our economy because our economy is based so heavily on crude. Even with inflation, if the Fed energy is so heavily, inflation so heavily dependent on energy and which way energy goes. The point being is that there is a major move about to happen in oil. And the easiest way to understand that hint and guidance of where that direction is going to be, use 44.81. If you reject, we're going to 35 or 34. It's going to be very quick. If we accept, we're going to go back to R1 and understand the market generated information that you need to accept or reject the pivot.